Yo, what's up everyone? My name is Dom and we're going to talk about unusual options activity. Alright, let's kick it off with the disclaimer. So, a disclaimer, this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guaranteed profit. Alright everyone, first one I want to bring up is ENG, Global Corporation. Now, I've been seeing a lot of unusual activity in some of these smaller cap, low share price names here, kind of like how I brought up ATOS when it was at $4 a share last weekend. Now it's at $7. So I've been having some luck with some of these, some of these high beta, low share price, low market cap stocks here. And if you take a look at these July 16th 5 strike calls, there was 22,000 contracts traded here. Now, if you go down to the time of sales here and check this out, there's a bunch of smaller orders down here, but this is the exact same scenario that I saw with ATOS, and that stock has almost made a double now since I brought it up. So now, if we take a look at the chart here, this thing had a huge run here. This is an energy company, engineering and such. I think they are, mostly focused, or they're beginning to focus on more of the renewable sector, hydrogen fuel cell engineering, stuff like that. Now, this thing had a massive run from 46 cents to $9. This thing has pulled back significantly, around 70 to 80%. And within the last couple days here, this thing has been catching a bid, and we just today broke above this 200-day moving average here, this blue line. Now that is extremely bullish. Usually when you're below the 200-day moving average, it's kind of tough to break out and stay out. We made a breakout here. We'll see what happens. I think this thing is going higher. I'm going to be looking to play this thing, definitely up to this 6 or 7 level. If you look here, people are buying the 7.5 strike call. The stock is currently at $3.50. So I've been searching for these extremely, I've been searching for people buying these extremely far out of the money calls, and you can see here, people are buying these. People aren't just coming in and shorting these or selling these. There are some people coming in and actually buying these up. You can just go through the time sales and check it out. So it's it's kind of been, both of these names are going to be sticking with this theme here. Low market cap stocks of people buying extremely far out of the money calls here. Now, same short term far out of the money calls specifically. Now, same thing with AHT here. There was about 38,000 contracts of these July 16th 5 strike calls. The stock is at about $4.68. They're also buying these July 16th 7.5 strike calls. That is very far out of the money. That's like 20 to 30% out of the money. For this trade to work out for these people buying this, the stock has to be above $7.50 a share on July 16th for this trade to work for these people. The stock is below $5. So if people are coming in buying this 7.5 call when the stock is at $5, they're expecting a massive move here, massive, and this extremely aggressive, far out of the money, short-term calls here. Now this thing has, was an $86 stock in July of 2018. I'm not saying it's going to get back there, but this thing, this is a REIT, by the way. This thing's pre-COVID high, was $26, and recently this thing has been catching a little bit of a bid here, coming up, consolidating a little bit, trading up to about a little over $7 here, pulling back to this, under 5 level here. So I like this stock, sticking with the theme here, short term, far out of the money calls, like people are coming in and buying these. We actually put a stock position on in this one. These stocks are so cheap. And the implied volatility is so high here, 200%. It's kind of like what I talked about with that ATOS trade. I actually bought the stock in that one. We're buying the stock in this one here. One thing I want to talk about with this ENG trade real quick is, they're buying the 5 strike call. I was thinking about buying the stock, but then I was like, I'm just going to buy this in the money call here. So I got the 2.5 strike call. And you may say, why would you go out and spend $100, for the 2.5 strike call when you could spend, $30 for the 5 strike call? Well, if you take a look here and analyze the in the money and the out of the money value here, that this option cost, this option premium is made up here, and especially with the super high implied volatility of 250%, that means that these options are really expensive, and the more in the money you go, the less out of the money premium you're paying here. So these calls are about $1, call it, 2.5 call, plus we're paying $1, makes the break even at $3.5. The stock is at $3.35. So our break even on July 16th is only $3.50 versus buying this extremely far out of the money call here. The 5-strike call is 30 cents. That puts your break even at $5.30. That's like 50% out of the money. Now I expect this stock to make a pretty sizable move here, but I was thinking about buying the stock anyway, and if you buy 100 shares of a stock, every time the stock moves up $1, you make $100. If but we're paying $335 to outlay for those 100 shares versus buying this July 2.5 strike call. We're paying $1 for it. When the stock moves up $1, we're collecting $82 here, as seen from this delta. So we're paying about 1/3 of the stock price here for a very far in the money call. The stock moves up $1, we'll make $82 on this option contract versus going out and buying the shares. It's pretty much the same thing. Buying the shares, stock moves up $1, you'd make $1. Here, stock moves up $1, we make $82, but we're paying 1/3 less in premium to control these 100 shares. So I hope that made sense to everybody. Kind of a quick explanation here. I don't like making long, drawn-out videos and such like that. So make sure to leave a comment down below if you got any questions, and we'll see you in the next one.